Good evening. It is time for today's tax talk. I am your host. I'm attorney Stephen Leahy. It is Crypto Tuesday. Let's put this up where I'm talking to the microphone. Crypto Tuesday, February 7th, year of our Lord 2023. We always talk about crypto and blockchain and NFTs and tokenization and well, that's what we're going to talk about today. Tokenized blockchain and the financial sector. Won't you join us? So tokenized blockchain. That's kind of a redundant, isn't it? Because blockchain is what makes it tokenized. But they're talking about it when it comes to financial services and things. Let me see, I should move this up a little bit. Let's see if I can do that. Just a little bit. I can't do it. Oh well. So we're going to talk about that today. But like we always do on Crypto Tuesday, though, we always start with our favorite website, coinflip.tech. Coinflip.tech. Okay. So that's what we're going to see now. Let's go to coinflip.tech. And we look at the markets, see what's going on there at the markets. In the crypto markets, it's Bitcoin's up almost 2% today. Ethereum's up almost 3.5%. But they still kind of track each other, like we always point out here. They look very similar. They're very they generally track one another. Here's got the one for the last week. And while it's a little bit higher of a level, it's still the same kind of level. It was at 16, so it's not too long ago. So that ain't too bad. That has come back up to 24. Now it's at today it's at 23, 262. So not bad, not great, but not bad. It ain't the 60 that it was, but still. There are those who are really forecasting big things for crypto this year. We'll see. Usually if they're saying there's big things, they ain't going to be big things because usually this stuff happens kind of without people knowing, right? When you know it's going to happen, it generally won't happen. So anyway, here's the story. It's in Forbes. How MasterCard, Goldman Sachs, and other TradeFi titans are using blockchain to rewire global finance. Well, if anybody's going to do it, it's going to be those companies. Crypto is in crisis, but many of the world's biggest financial institutions are still banking on the underlying tech as the best way to build confidence with customers and with one another. Again, I've always said, yes, crypto is important. Yes, it's a great area. But really what the power is blockchain. And that's why I keep coming back to a lot of these stories. Also because there's not a lot going on in crypto outside the price and everything. FTX has kind of brought everything down, and there's more Binance and these other exchanges are having trouble. Will they survive? We'll see. Will they probably be consolidated? Probably. So there will always be new payment technology, says Michael Maybach. I don't know if that's how you pronounce it. Chief executive of MasterCard. You think I would know his name? The world's second largest payments company. First, there were cards using ISO 8583. ISO numbers refer to international standards. Messaging technology, which is 50 years old. Then real-time payments became real with ISO 20022. And then came blockchain. And we all said, okay, what would that solve? There's a whole set of real-life problems out there that blockchain can solve. In late January, the 55-year-old Maybach told analysts and shareholders that his company had surpassed 2 billion tokenized transactions per month, up 38% in a year. and that MasterCard was enabling digital payments in 110 countries. The big benefit? Less fraud. Today, tokenization at MasterCard means replacing the 16-digit number of your plastic credit card with a super secure, unique digital record for every transaction without ever leaving behind your identity in the form of a credit card number. Well, that's pretty intriguing, don't you think? It also allows customers to utilize digital wallets. It's not yet on the blockchain, but MasterCard is currently working with banks and merchants to tokenize a variety of assets, including deposits, which will be tracked on multiple public and private blockchains. Makes sense. Now, we can all see how much money you have in the bank. And I don't mean that facetiously, right? You don't have to put it all in the same account. But if I'm going to put money in, you can see it. It'll make the transaction go a lot faster. You can tokenize anything. I think we're going to have a world where everything will be tokenized and will be passed around in the same fashion. MasterCard is one of the 22 financial companies that make up Forbes' 2023 Blockchain 50 list of billion-dollar companies putting distributed ledger technology to real use. MasterCard is also a prototypical corporate middleman. It raked in $22 billion in revenue and $10 billion in profit last year from the fees it charges financial institutions to essentially help customers spend their own money. In other words, MasterCard is exactly the type of company that crypto zealots love to hate. They're the ones we're trying to get rid of. That's what crypto promises, to get rid of that middleman and that $12 billion or $10 billion in profits. But it is trusted by millions of merchants worldwide. And in the wake of Web3's never-ending barrage of scandals, scams, and swindles, trust is exactly what the sector needs. Smelling opportunity, blue-chip financial giants, including BlackRock, JP Morgan, and Fidelity, have become some of the biggest champions of the new technology. I'm not going to read this stuff. I'm not going to go into this. What do you need for blockchain to scale, he asks, whose company launched 35 new crypto-friendly debit and credit cards last year. It scaled for traditional payments because people trust experience. They trust data privacy, and they trust they won't be taken for a ride. Other TradeFi CIOs are right along him, beating the crypto drum. In December, David Solomon, the CEO of Goldman Sachs, penned an opinion piece in the Wall Street Journal headlined, "Blockchain is much more than crypto." I don't know if I covered that story. I seem to remember that story, in which the boss of Wall Street's most iconic firm cautioned against dismissing the technology in the wake of the Sam Bankman-Fried FTX fiasco. The crux of his argument? Under the guidance of a regulated financial institution like ours, blockchain innovations can flourish. I always thought that the internet would free us would give us more freedom when it comes to choices of reading stuff, and it's given us less. We're more controlled than ever. It doesn't. Maybe that's what's going to happen with crypto. I don't know. Or this blockchain. Maybe it's the chains that bind us. I don't know. Well, I guess we'll see because it ain't going away. So let's go back. Big banks like Goldman have largely avoided directly investing in cryptocurrencies, but have quietly been working with their underlying technology. We see huge commercial opportunities, says Matthew McDermott, head of the digital assets at Goldman Sachs. In November, his 70-person team underwrote a 100-pound, or whatever that symbol is, bond offering for the European Investment Bank in conjunction with Santander and Societe Generale. I don't know what that is. The process took just 60 seconds. Typically, a bond sale like that takes about 5 days. Well, that's a huge improvement, isn't it? There are people who would like to continue to trade the crypto market, and we're keen to help them through derivatives or options, McDermott adds. One strong piece of evidence pointing to the value of trust. In 2022, big unregulated crypto exchanges like Binance and others saw volume fall by more than 25% through September. While CME, Chicago's highly regulated futures trading exchange, saw increases of 62% in Bitcoin futures and 80% in Ethereum futures over the same period. I know they're looking for something. Likewise, Fidelity is seizing upon the crisis in crypto confidence by flooding Instagram feeds with advertisement for its soon-to-be-launched Fidelity Crypto. Get on the early access list to trade Bitcoin and Ethereum, reads one promotion. Start with the names you know. Invest with the name you can trust. I guess it's better than FTX. What would you think? The nation's oldest bank, 230-year-old BNY Mellon, already offers digital asset custody for U.S. asset managers and provides back-office services to 19 Canadian crypto ETFs and mutual funds. Like David Solomon at Goldman, Mellon's chief executive, Robin Vince, took to the newspapers to announce the seriousness of his bank's crypto plans, writing a December article in the Financial Times entitled "Time for a Reset of the Crypto Opportunity." J.P. Morgan's 66-year-old CEO Jamie Dimon called cryptocurrencies decentralized Ponzi schemes last fall, but his bankers have been hard at work using blockchain tech to execute $550 billion in repurchase agreements since 2020. The next generation for markets, the next generation for securities will be tokenization, insisted Larry Fink, chief executive of BlackRock, the world's largest asset manager with $8.6 trillion under management. At a Deal Book conference in November, for now, BlackRock is mostly acting as a service provider for a select few so-called crypto-native companies. It has partnered with Coinbase to offer BlackRock's thousands of institutional investors and wealth management customers access to Bitcoin and other cryptocurrencies through its Aladdin portfolio management software. It also holds $34 billion in treasury bills as reserves for Circle's U.S. dollar-backed stablecoin, USDC. While established financial institutions are shrewdly stepping forward to supplant crypto startups, there are worries among crypto industry purists over the future of blockchain technology. Am I a purist? I think maybe I am. Maybe that's why I'm suspicious of these actions, with the biggest banks taking over what was supposed to be independent. One schism, Web3 evangelists love open source, decentralized public blockchains. Big enterprises and totalitarian governments prefer private blockchains precisely because they offer more control. Kind of what I was getting at. That remains true even after some big private blockchain projects failed spectacularly. In 2020, former Blockchain 50 member Honeywell began using private blockchain Hyperledger Fabric for buying and selling used aerospace parts. Development was halted as of November 2022. Merrick and IBM scrapped their TradeLens global shipping supply chain blockchain in November after hiring 19 staffers and spending more than 4 years on the project. Public blockchains can offer advantages in terms of speed and cost. Private equity pioneer KKR, whose funds manage $496 billion worth of assets, recently opened a $4 billion healthcare strategic growth fund to distribution via Avalanche, a fast public blockchain that boasts 4,500 transactions per second. Ethereum can still only handle 15. Other Avalanche users include CME Group, payments company FIS, and MasterCard. In China, cryptocurrencies and crypto mining are illegal, but blockchain is an important part of President Xi Jinping's Vision 2035 National Development Strategy. None of China's sanctioned blockchains are public. Go figure. China's blockchain and technology base, including its blockchain-based service network, which has been described as the digital Silk Road connecting and monitoring multiple blockchains, is far outpacing development in the United States. 2 years ago, Blockchain 50 member China Construction Bank built a platform that cuts out SWIFT, the most widely used interbank system for transferring funds. It recently launched a giant distributed ledger for credit reports that lets bank subsidiaries share information while complying with government privacy regulations. It has already used its blockchain to give $4.2 billion in credit to 2 million customers and hopes to reach 700 million people by mid-2025. In addition to China Construction Bank, 5 Chinese companies, including Tencent, WeWeb, and Alibaba's Ant Group, feature on this year's Blockchain 50. MasterCard's Mybeck thinks crypto's latest woes might actually speed up the adoption of the new technology. You are going to get more mainstream players in, and the regulators are going to show up to address the risks, he says. That's a recipe for this to become a mainstream technology. I think crypto's recent winter storm is going to help. It helps them take over. It doesn't. Here's a story. I'm not going to get into it. I don't have time. But institutional traders shifting attention from blockchain to AI. J.P. Morgan. Nearly 3 out of 4 institutional traders have no plans to trade crypto. More than half of the institutional traders surveyed by global financial services giant J.P. Morgan said that artificial intelligence and machine learning will be the most influential technology in shaping the future of trading over the next 3 years, cited 4 times more often than blockchain and distributed ledger technology. J.P. Morgan's e-trading edit group report is now in its 7th year. The latest report, drawn from its January survey of 835 institutional traders in 60 global markets. The annual assessment of trader sentiment spans several asset classes and is intended to reveal upcoming trends in the most hotly debated topics. The tremendous bear market in crypto, coupled with the recent consumer and commercial hype over accessible AI technology like ChatGPT, seems to have shifted the outlook of financial industry professionals. Last year, blockchain and distributed ledger technology tied for second with the AI, and machine learning with 25% of respondents declaring them key to the future. Mobile trading applications came in first with 29%. Now AI dwarfs every other major category of technology. Its 53% citation rate, far and away ahead of API integration, and blockchain, 12%. The top 2022 technology mobile apps fell to 7%, along with quantum computing and natural language processing. Tackling crypto specifically, JP found that 72% of traders have no plans to trade crypto or digital coins, with 14% predicting the plan to trade within 5 years. Even so, respondents clearly felt that the other players were bullish on the space. That's as far as I'm going. But I just thought it was interesting how quickly, well, maybe I can't. Got a couple minutes. Crypto and digital coins, commodities, and credit are predicted to have the biggest increases in electronic trading volumes over the next year, the report notes, with participants predicting 64% of the activity will be in crypto space in 2024. While the survey found traders were unanimous in their beliefs that electronic trading will continue to grow, they also expected rough weather ahead. When asked which potential developments will have the greatest impact on the markets in 2023, the top answers were recession risk, inflation, and geopolitical conflict. The e-trading edit report is only the latest of several studies and reports that J.P. Morgan has released in the past month relating to cryptocurrency and digital assets. Last week, the firm predicted significant challenges from Bitcoin and Ethereum and noted that Solyndra, Terra, and tokens were gaining traction in the world of decentralized finance and non-fungible tokens. J.P. Morgan also looked at the prospects for leading crypto exchange Coinbase last month, saying that upcoming Shanghai update for Ethereum could usher in a new era of staking for the firm. Okay, so we finished it. So there we go. Interesting stuff. I like to stay on top of this stuff, and I know you do too. Where else are you going to find this kind of stuff, right? I mean, I scour the papers or the internet for these stories, so you don't have to. And you could get it out to your friends and family. Just like and subscribe. Like and subscribe. We need your help to get this information out there. And if you subscribe to our channel, you can find it. hit the button, get alerted whenever we come out. We're generally here Monday through Thursday around 7 o'clock, 7 to 7:30. So join us. Please like and subscribe. We need your help. Like and subscribe. Like and subscribe. Remember, if you're fighting the IRS, if you owe the IRS money, if you have unfiled tax returns and you don't know what to do, first thing you should do, get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. That's freeirsbook.com. Get your free copy. I will pay for the publishing if you pay for the shipping and handling. And again, the shipping and handling is under $10. So go to freeirsbook.com and get your free copy. Thanks again for joining us. Tomorrow is another day when we come back and we talk about the IRS and taxes and all things interesting, I think. So I hope you can join us here tomorrow. In the meantime, God bless you, and we'll see you then. Out.